I am doing it day in and day out. I don't have to predict the markets. I'm doing it day in and day out. You just saw. Let us discuss the last position. We did it on 8th, right? During the second check-in. So that is somewhere around 1. We established that position, 11:45, 12:45. So somewhere in this range, we established the position, right, during GHI period. So now, why did I take this position? Simple. The directional bias was up. Why? Because you were continuously developing the value higher. You had a big inventory adjustment break that ended up in the rejection, and then market started going higher, forming value higher. When we started the day out, we had a failed auction. So what all these things are telling me is that as soon as the prices go lower, buyers are coming in strongly and defending the price. Now, where are those buying spurts coming in? You can see this was a breakout day. So at the point of control of that day, this was an important lower distribution which we rejected, went back up. So at the point of control of that day, and one time framing is happening, range extension is happening. All this is telling me that buyers are doing a good job of going higher. The directional bias is already higher. So what I do, I go and ahead and I establish a bullish credit spread. Where am I predicting that the markets will move from this level to this level, or they will stay within a range? I am keeping a fair amount of distance. I'm not saying the market will stay above 37,200. That also I'm not saying. What I'm saying is that I am keeping a fair amount of distance, almost 1,000 points, between the current market price and my short strike. And if it starts coming down and it tags 37,700, I will adjust. So nowhere am I predicting or trying to predict that the markets either will go up or go down. Directional bias, markets are telling me the bias is up, so I'm following that. You can see, we did not take out any last month of demand. So as long as the market is moving higher, I'm happy. I'm happy to stay with that directional bias, right? So I'm not predicting at all. And it's difficult basically to wrap your head around that concept. I have struggled with that for a decade almost. That how can I trade without predicting whether the markets will go up or down tomorrow? Now, today's market has gone up. Did we know it will go up? No. You can go on the social media timeline and you will find 100 people absolutely certainly knowing that market was going to go up. I did not know that. But what I know is that the directional bias is up. So the chances of market going higher are higher than they coming down. And even if it comes down, there was an anomaly, there was a logic for that. And if at all it comes down, then we knew that okay, around 37,700 we have to start thinking about adjusting our position. Simple. So you don't have to predict at all. But yeah, you need to understand like whether markets are doing a good job or not of going higher or lower, what the directional bias is, where the directional bias changes. So if you can answer all these questions, you are well on your way to trading the market successfully for the long term without ever predicting it even for a single day. That's a possibility.